Testing, 1, 2, 3. Testing, 1, 2, 3. Good afternoon, everybody. Good afternoon. Welcome to Paul's Monday Market Update, 176 for Monday, 10th of March, 2025. I hope you're all well. I hope you've had a good weekend. I was away in Edinburgh for the Six Nations, seeing it with friends. It was a fabulous weekend. It's a good way to start the what's going to be a challenging week. As always, if you're joining us here in the live session, okay, in Zoom, or if you're joining us on the YouTube live stream, if you can just confirm that you can hear my voice and you can see my charts, that would be a good start to our session today. Fabulous. Thank you, guys. Absolutely. Thank you. As always, okay, if you're joining us for the first time, the Monday Market Update is literally just that. It is me flying through as much as I can fit in over the next 30 minutes, giving you some insight into strength and weakness within FX markets, looking at a few charts of interest you might want to add to your watch list for the week ahead, and then a look at the live markets. It is not a signal service. It's not trade recommendations. It's just me sharing what I'm looking at, which might be of relevance or help to yourselves. As always, you are all very welcome here. Just remember, though, that you are always responsible for your own trading decisions. If you want a little bit more education, I'll be doing the Active Trades Monday Market Matters webinar, 2 o'clock London time this afternoon. The education element will be trading using trend lines. You're very welcome to join us there. You can either register on their website or use the QR code. And I'm also doing a Wednesday evening, okay, Market Pulse weekly update for Admiral Market, 7 o'clock London time Wednesday. Just me looking through global markets, sterling and UK stocks, and you're welcome to join us. Okay, let's dig into the main thrust of what we're here to talk about. As always, okay, what I want to do is, I appreciate if you're new to trading, okay, or new to joining us, this might look maybe a little overwhelming or a little intimidating. All it is parts from my own STAM model, the work I do every weekend, trying to identify where's the strength, trend, and momentum within FX markets, but also indices and commodities markets. So what is this telling us and how can we use it? Well, here we are. We are into week 11 of the year, 10th of March. Where's the strength? Where's the weakness? Well, strength still resides with Japanese yen, and no real particular reason to change that view. And even here, when I look at what's been going on since markets opened last night for us here in Europe, and what we can see is once again, dollar's been pretty weak, but then also Japanese yen continues to be strong. CAD weakened, but we'll come on to that more a little bit later. In second place is sterling, okay, and of course we always finish the session with a look at sterling, so we can see there's plenty going on there. Okay, sterling is benefiting from that that sort of dollar weakness and anti-Trump stance. And certainly when I look at the individual sort of, if we're looking here at the sterling pairs, they all tend to be in strategic buy, okay, for those sterling pairs. So that helps guide me. And that's why I do this, in order to be able to help understand my, allocate my time, energy and resources more efficiently for the week ahead. So there's the strength. Where's the weakness? Weakness is still at the bottom of the pile. Here we have Canadian dollar, which we'll look at a little bit later. Kiwi dollar, and then also Aussie. As I said, condols are at the bottom of the pile. And what you do have is, Japanese yen at the top of the pile. And that might give you an indication that we're in a sort of risk-off environment. For those of you on the VTP stage 1, that's what we're going to be talking about tonight. Okay, understanding RORO, but you can see it very, very clearly there in the STAM in terms of what it's telling us. Euro has strengthened a little bit, but I think what that is once again that is that anti-Trump, anti-dollar sort of influence, and also everybody's still sort of a little bit giddy about European politicians coming out last week talking about how they're going to rearm Europe. But we covered plenty of that last week. All right, you'll hear. We don't really need to go into that anymore. Okay, I'll just get Paul onto his kind of middle-aged man rants. No need for that, all right. But what we can certainly see, as I said, is US dollars kind of been falling down the pile, which we'll see when we look at the dollar charts in a moment. And Swiss is kind of fair to middling, all right. Not really giving anybody anything to get terribly excited about. Excuse me. When I start to look at indices and commodities, what I'm interested here is, bang, the four American, the four big major indexes are all in either a strategic sell for the Russell or tactical sells, S to S, STAM to S, for the Dow, the S&P, and the Nasdaq, and we'll look at that in a particular moment. No surprise to see that the Nikkei is the same as is the ASX, in Australia. That's just giving you an indication. You've got the currency markets telling you kind of risk off, and you've also got the indices showing you that basically, nobody's particularly bullish at the moment. Now, of course, that could all change this week. One tweet from Mr. Trump, or one particular comment, and that bullishness can return in some sort of form. But at the moment, you trade what you see, and at the moment, we're risk off, and people are looking at being bearish and short on those particular indices. Now, of course, we've got some earnings out this week, which we'll look at in a moment. Well, I would suggest none of the big major guys are there, but maybe we'll look at one or two of them in a moment. But of course, when we look at the economic calendar for the week, well, of course, we have got the dollar, in terms of reference. The US has got CPI on, you've got JOLTS job openings tomorrow. You've got CPI on Wednesday. You've got PPI on Thursday, and unemployment claims, and then also consumer sentiment on Friday, and inflation expectations. On the flip side of also as well, you've got for here in the UK, we've got GDP on Friday morning. Of course, people will be interested to see what the score is there. I suspect that might well be as underwhelming as the last few numbers have been. And then, of course, we have the Bank of Canada statement on Wednesday, and expecting an interest rate cut. And of course, also one of the other things that's kind of weighing on Canadian dollar is over the weekend we had Mark Carney, the ex-governor of the Bank of England, known as the unreliable boyfriend. He's effectively replacing Trudeau as the head of I think is it the Liberal Party in Canada. Those of you who follow Canadian politics, please feel free to correct me. But he's just a placeholder, isn't he? He's done a very, very fine job, Mr. Carney, of getting himself placed into increasingly interesting jobs. So make of that what you will. Ultimately, we're interested in what impacts that having on the Canadian dollar, and is there a way I can take advantage of it? That's the long and the short of it. So pretty much risk off, bearish mode at this particular moment, all right? And we will see if any of the data this week can change that narrative, or Mr. Trump, has some way of changing that narrative. We shall see, okay? But that's the way I'm viewing it as I go into this into the start of this week. Okay, so let's have a look at a few charts of interest. So I just always put up a few different charts, okay? I don't consider myself an equity specialist, but I think we can all look at charts, we can all learn from them, and we can all, be interested by what's going on, the price action. As I said, you might want to add something to your watch list. So this is the weekly chart of the CAC 40, all right, the French index. Now, of course, we've covered a lot of the DAX, which has been on a tear, and we've covered a little bit of sterling, which has been kind of a bit of a laggard. But we haven't really talked much about the French index, and I thought this might be an opportunity to sort of take a little look at it. By the looks of it, what we had a really nice double top here, which would have been early last year. Some of you might remember that basically the French political system once again went a little bit crazy, and then invariably Macron called, didn't he call like a snap election? That didn't really work out so well, right, as you can see from there. But then invariably what we've seen is a little bit of madness going on there. But actually, these last couple of weeks, we can see that we've had a little bit of a pump now. Is that because of increased defence spending? Is that because people are, thinking that the madness is over in France? You can draw your own conclusions, okay? The way I look at it as a trader is that we are back up at these highs here, okay? I think it's around about 82.50, and I look at it as once again, okay, the price action for last week, I look at that as a bit of a high wave candle, all right? Big wicks to either side, not much of a body, indecision. We're sat above 8,000 and once again squeezed between 82.50. And so I'm looking to see, all right, what's going to happen here? Is it going to build up Is it going to sort of build up pressure and continue higher, or is it going to do like last time, kind of roll over? And and if 8,000 doesn't hold as support, well then I'd look at us back at towards 7,700. So it's at an interesting point. It's at a point of interest. That's when I start to sort of get intrigued by, okay, where can we go from here? Okay, as I said, it doesn't look, I wouldn't exactly say that looks terribly bullish at the moment, but it might just be in an accumulation phase. Okay, before its next move, we'll wait and see. But as I said, you might want to add that to your watch list. That next chart of interest is Oracle. Okay, Oracle. Once again, this is the weekly chart of Oracle. Oracle are, I think they've got earnings after the close today. Okay, so of course, and that's another reason why it adds of interest to us. Oracle it's an interesting beast. Okay, it was a real beast out after the end of the dot-com boom. Okay, and started that second wave, and it is involved in AI, or it claims to be, but it is not. It does not seem to have been caught up in that kind of Mag 7 sort of what should we say? That kind of Mag 7 narrative. But it's been doing its own thing in that. And as you can see, on the weekly chart, that has continued to, for the most part, okay, play out well for it. Always interested to see that kind of the 50-period moving average has acted as really kind of a support, real good dynamic support, which then became the 20, which is showing you the trend was taking off. And as I tell people all the time, okay, once the trend starts going vertical, you always get a little bit nervous. And what happens here? Bosh. Okay, all right. Towards the end of last year, we get that is a big bearish engulfing candle. It's a key reversal candle, which becomes a kind of a lower high. And then basically we get period 20 here. And now, if you look at last week, we came back down to the 50. So we've gone from just tickling the soft underbelly of $200 to sort of about $150, $153. And one of the other reasons I want to put this in is if you look at a lot of the weekly charts of the indexes, a lot of the tech stocks and some of the other major stocks, you'll find there's an awful lot. Last week I've come back to the 50-period moving average, and so once again I start to get interested. Is this a case that we get the earnings are good and it gives Oracle a bounce and the market, or are the numbers weak and actually we slice the 50? Okay, and as I said, you can see it's acted as great support. The question is, do the earnings today, do they basically keep that Oracle story alive, or do they accelerate a rollover? So that's why it's in my kind of charts of interest, and as I said, you might want to take a watch and see how it responds this evening after markets. This one here, okay, this is XLF, the ETF for the financials, and I was intrigued to put this in because, as you can see, the weekly chart, and we've talked about it before, it has been in a great trend, and it's a simple adage, all right, but really it's very difficult for you to be in a really strong bull trend if the financial companies aren't part of it, okay, if they aren't underpinning it. And that has certainly been the case, hasn't it? You can see for yourself, okay, that has run nicely, and it has basically, sort of the 20-period moving average has acted as nice support there. But what did we get last week? Okay, last week, all right, this is basically big bearish engulfing, big bearish key reversal candle. Once again, if you look at the individual financial companies, so if you look at JP Morgan, Goldman Sachs, a few of the others, they have either printed the kind of the same pattern, or they've already kind of come off their tops, and that starts to give you some concern. As I said, if you want financials to underpin a good bull market, well, if their rugs are being pulled, well, then that would be a kind of a bit of a heads up for me, and I would start to take notice of that. So the price action there is telling me just to tread carefully there. Okay, as I said, maybe the earnings, maybe the data this week changes that narrative. We shall see, but I would definitely just be treading carefully. And as I say, go and have a look at all of those kind of major American financial companies, and you'll see, for the most part, the price action is pretty similar at the moment. And a final one, okay. Let's finish on a good news story, shall we? Okay. So this was brought to my attention by James, one of the guys on the VTP Discord. Thank you, James. As I say to everybody, if there's a particular stock you want me to look at or a particular instrument, by all means, I'm happy to include it in. AutoZone, originally Auto Shack. They are the kind of I think they're America's largest, let's say, car repair, car replacement, vehicle replacement parts company in the US. And you can see for yourself, this is a weekly chart, and what a chart it's been. All right. So from these kind of lows around 700, like kind of at COVID, well, bang, here we are trading at $3,600 there. And what a trend that has been. Remember, you hear me saying all the time to new people, all right, and okay, your job is just to find a trend and capture a piece of it, okay? You don't have to capture all of it. You don't have to capture the exact start and the end. Capturing a piece of a good trend is a good way to operate. Just don't fight good trends. And this has been quite some trend, hasn't it? It's worked beautifully. And it's in the pre-market's a little bit lower, okay, because I think their earnings were a little bit less than expected, but nonetheless, that is still a good trend, and it kind of leads me to think about it. There's two things here. One, I always tell people if you're going to trade and invest, you should probably do it in things that you understand or know, rather than some esoteric sort of, biotech company which you have no idea what it is or how it actually works. And most of my good mates today are petrol heads. All right, I'm not one. Cars are a bit slow and two-dimensional for my head brain, but they love it. All right, and they are constantly talking about how they are repairing their cars. And I wonder whether this is a reflection of the changed world we live in as cars have become more expensive, as car repairs have become more expensive, as money has become more expensive. Is it a case of people are just, kind of having to repair their cars rather than actually sort of replace them? I wonder whether that's it. Once again, I'm not a petrol head. You might have a very different view on basically the industry in this company, in which case you're very welcome to share it with me. I'm always happy to learn, okay, and understand, but that would be let's say my superficial first shot at it. But nonetheless, look at that. That is a cracking trend, ladies and gentlemen. And if you've been invested in that and working that, then well done, fair play to you. That's a beauty. Okay, all right. That's the charts of interest over. Let's switch across to the live markets now and have a look at what's going on there. So if you just bear with me for a moment, what we'll do is we will switch across. So as I said, just bear with me a moment. Let's bring these up. Where are we starting? Let's get rid of that. Bang. Once again, I'm hoping that you can still hear my voice, hoping that you can, see the charts. Okay. So what have we got here? This is my standard, the indexes that I kind of start off with. Let's just draw them in. Dow, Nasdaq, S&P 500, Russell, DAX, Nikkei, FTSE, and crude. All right, weekly charts. We talked about topping out here. Okay, look at that. Last week was a particularly strong sell-off there in the Dow, and you can see that trend, is there in terms of the weekly of the recent trend is most definitely sort of to the bearish side. Nasdaq, look at that. Okay, once again, that was basically another bearish week. And remember what I was saying earlier is that you'll find there's quite a few of the indexes and the individual stocks at their 50-period moving average. Okay, and we're looking to see, that's an inflection point for me. Is this uptrend going to hold, or does the uptrend, or does this uptrend sort of roll over? Okay, so the same in the S&P. Okay, big strong sell off there. Russell has already gone through it. Okay, and is probably on its way to its 200. But this is why, in terms of STAM, they are either tactical shorts or strategic shorts. Okay, that we can watch on. And as I said, just be keeping a particular eye on that. Nikkei, okay, which had been holding up for so long. All right, that has basically worked its way over there. DAX is slowing down a bit, but I think here we go. Bang! If I look quickly at the DAX, you can see that last week is that kind of German government giddiness, okay, about rearming and opening up what is it, 400 billion, 500 billion euro infrastructure fund, etc. I think that is kind of the giddiness off that. It hasn't kind of the hangover hasn't kicked in yet. But if you look at European bond markets, the hangover's in the post, shall we say? FTSE, all right, FTSE, last week, despite I was looking to see we were returning, and we had one last push. And once again, I would look at that as an indecision. I don't look at that as bullish. Certainly, this week hasn't started great, but it's a case of it was that kind of. Is this like basically a false breakout? All right, a false breakout to the north. I'll be watching that like a hawk on the FTSE this particular week. Gold, I know you're all interested in gold. Interestingly, okay, we talked about how gold on the weekly chart had printed this bearish engulfing candle, bearish key reversal. One swallow doesn't make a summer, so to speak. We can see last week with all the kind of the geopolitical toing froing, just basically that all that anxiety gave a little bit of a bullish week, all right. But when you start to dig down into it, just look at that for the last few days. To me, that is gold on the daily, sat above the 2,900. Okay, it's sat on the 2,900, it's sat at the 20-period moving average. It is that bullish. Okay, would you look at that as being particularly bullish? I personally wouldn't, but as I said, one tweet from Mr. Trump, that can all change. But even though the week was a bullish week, I don't particularly see that as a really strong bullish price action myself. So once again, I'll be adding that, watching that to see whether that rolls over, and even if it just rolls over and moves to the 50, okay, or whether there is more anxiety inducing gold buying that basically pumps it to highs. All right, so watch and shoot on gold. Silver has been interesting though, because whereas gold might have had that little play on silver, silver, I had a tactical short here, okay, the other week. I'm basically shorting it off the inside bar, pin bar at the kind of one of the highs from the previous year. But you can see it kind of it pumped up again last week, okay. And the difference is here, look at that. That is a nice morning star off the 50, pumps up, holds the 20, and at the moment the 20 is holding, all right. Whereas the wicks, whereas it's indecision wicks on gold, to me at the moment these are bullish supporting wicks, okay, on silver. So whether maybe silver sort of is the one that makes the move rather than gold, okay. So you might just want to watch that to see how that figures itself out. Let's have a look at a dollar. What we'll do is we'll go for a dollar, Canadian dollar, and sterling, okay. And that's what we'll look at today. So excuse me. As I say to people, even if you're at the start of your journey, if you're looking at FX, primarily I do a lot of FX trading on sterling. That's my favorite and preferred implement. However, even with that, I still start with the dollar. Always start with the dollar and the dollar index, because the dollar's the daddy, all right, when it comes to the FX market, and I want to know what's going on there, what's happening with it. It normally helps if your chart update even faster, okay. But that's probably more to me running like 2 dozen different packages. All right, here we go. Dollar index. Let's get the drawing tool up. So just this is a dollar profile, Aussie dollar, Kiwi dollar, Euro dollar, pound dollar, dollar Swiss, dollar CAD, dollar yen. All right, dollar yen. Look at that weekly chart. What's that telling you? Okay, dollar weakness, yen strength. Euro dollar, okay, has had its bump. All right, sterling against dollar has had a bump. Okay, dollar has flattened out against Swiss franc. All right, Canadian dollar is a little bit mixed. Kiwi dollar is struggling. All right, but then Kiwi and Aussie dollar are struggling a little bit. But then they are the bottom of the STAM. Okay, so when we look at the dollar index itself, just look at this move here. You've heard me talking about 110 indecision, a lower high, and then we've just worked our way down. Okay, having worked our way down there, if we go down to that daily chart, look at last week. That was just dollar sell-off, wasn't it? Dollar sell-off. That's what's happened there. Yeah, and there's a bit of wicks there towards the end at this kind of, let's say, 103.50 area that we've seen before. But you can see last week, we closed beneath the 50, all right, which we haven't done since October. Okay, so we've had a good 5 months or so, 5 months above it. My normal view, okay, my own view is that things want to always like retest. My view would be, well, could dollar get a bump up here and then move down to the 200? That's what a scenario I'd be looking at. Okay, does that do that? And and in that time, the 20 kind of rolls over as well, and the 50 starts to just nudge lower. That's a scenario. All right, that doesn't mean I'm just going to put a trade on for that. It's just a scenario in my mind when I just quickly look at the chart and see, what could I see play, and if that was to work out, well, then I'll trade the upside of it. And what I mean by the upside is I rarely ever trade the dollar index itself. I tend to look at it against the other majors, all right, but I use it as a, let's say, as a guiding tool. So we can see dollar is weak, and invariably what we're seeing there is that kind of, if we look at the euro against the dollar, right, opposite to the inversely correlated there, you can see that basically, it was a good week for euro bulls, all right, but as I said, a lot of that is dollar and anti-Trump stance more so than the world going rah rah for Europe, or maybe I'm wrong. Maybe I'm wrong. Maybe everybody thinks that Europe is the answer. We shall wait and see. Okay, we'll wait and see with bated breath. But you can see the idea there. All right, you've got the idea there that basically, dollar is weak. All right, can the data this week change that? Well, we're just gonna have to wait and see what that CPI data is. All right, personally, I think that will give us an interesting, because if the CPI data is hotter, all right, like some of the last few recent things, that starts to put them in a bit of a pickle. But if the CPI data is much lower than that, will, I think, add to dollar bearishness. All right, let's have a quick look at Canadian dollar. Let's have a look at sterling. All right, Canadian dollar. All right, so as I said, Mr. Trudeau is kind of stepped aside, all right, and for Mr. Carney, make of that what you will. But we've also got the Canadian bank statement, okay, their interest rate statement on Wednesday afternoon. People are expecting another 0.25% interest rate cut from 3 to 2.75, I think. And they're also expecting at least maybe one, maybe two more, certainly in the next 6 months or so. So there is all that weakness in Canada, and then that's before we even start talking about the tariff tantrums. But we can start to get an idea, okay, when we look at the Canadian dollar. Now, I would look at that as, over these kind of last couple of weeks, kind of US dollar, Canadian dollar on the daily chart, all right, that's whipsawing about. That's the way I'd look at it, okay? One day the dollar's up, one day the Canadian dollar's up, okay? And that is a reflection of that kind of Trump tariff tirades, okay, and how that's playing out. But, let's look at the others. Canadian against yen, all right? So you're basically that strong v weak. This is what I'm always trying to do in the FX market, okay? I just want to trade strength v weakness. I'm not trying to be a rock star. I'm not trying to reinvent the wheel. I'm not trying to, be a smart ass, okay? Just strength v weakness, okay? And Canadian yen short, okay, has been, you've got yen strength, Canadian dollar weakness. Why would you fight that? Look at that. Canadian against Swiss franc last month, okay? Canadian weakness, Swiss franc strengthness. Euro against Canadian dollar, okay? Look at that. Euro against that's euro strength, Canadian dollar weakness. We've also had pound against Canadian dollar, which I've had pieces of, all right, because that is pound strength, Canadian dollar weakness. Even if we look at Aussie and Kiwi, all right, Aussie and Kiwi, who have been exceptionally low, all right, they've ground out, all right, they've ground out a bit of strength against Canadian dollar, and that is just really giving us an indication of that Canadian dollar. Is that going to change with Mr. Carney replacing the tirade Trudeau, or I think a lot of it will depend upon how quickly he feels he has to pull an election, okay, to have a mandate, to have any confidence. Of course, he's come in sort of all guns blazing, telling that that he understands economics, and he'll be able to deal with Mr. Trump. Good luck with that. Okay, let's see how that plays out. All right, that's quite a high stakes opening gambit. All right, for your first day in the job. So let's see how that plays out. Okay, but what we can see is Canadian dollars just getting rolled, isn't it? And as I said, why would you fight that? All right, so that's Canadian dollar. Let's finish with sterling. Okay, we might overrun by a couple of minutes. I apologise. As always, I'm trying to race through to fit as much as I possibly can in for you for the week ahead. All right, what's sterling telling us? How's that particularly playing out? All right, so daily charts, pound against dollar. Dollar weakness, sterling strength. Well, hey presto, look at the way that's particularly played out. The interesting one is probably pound against Japanese yen. What we've got here, is you can see that has basically been whipsawing there between about 188 and 192. So you're a 400-point range there over the last month. But remember, yen is number one, sterling's number two. Trading 1v2, trading strength v strength is invariably usually challenging. So if you are looking to be a trend trader, remember it's all about strength v weakness. That's what we are particularly looking for. Hence why pound against Aussie has gone well here. Pound against New Zealand dollar has gone well. Pound against Canadian dollar has gone well. pound against Swiss franc. Well, you know how much I have a kind of love-hate relationship with pound Swiss franc, all right, and the way it plays. Let's go up to the weekly chart on that. Last week, once again, we pumped up through it, but we came back in that range, didn't we? That kind of, it's about 114, just doesn't really here. Even though we went through it, we came right back down on the daily chart, all right? So, we've got that kind of 114 level there, all right, which is acting as support. Yeah, I would look at all the lows are getting higher, all right. But for some reason, someone doesn't want it going above 114, all right. Somebody's playing games there, all right. So just as I said, watch and shoot. And finish off with euro against sterling. Well, we've been in that downtrend, all right. I thought maybe we had an end to it here at the end of last year with these pin bars and key reversals, but we once again pumped up to the 50, and the 50 acted as dynamic resistance. We dropped down back to the zone and we pumped up again. But once again, look where we ended last week in terms of we traded high, and where what stopped us was the 50th, the 50 period moving average, and we've come down to it. Now we're only half a day in, so this doesn't really count for anything in that sense. But if I look on the daily chart, yeah, the daily 200, pin bars, the daily 200, okay, at 8,400. This is going to be an interesting point here. I think we're going to have to just watch and see how this particularly plays out. There's lots of wicks. There's 200 period moving average, 8,400 number. Is this going to be a case of just going to literally sort of go a little bit sideways? We've got UK GDP on Friday morning, but there's not really major European or UK news this week. It'll probably be more about sort of the as I said, the hangover from last week's announcements. Now that people start to try to look into the actual detail and see whether there's actually anything of value there, or basically it's old Mother Hubbard going to the cupboard. We shall wait and see on that. Okay, there you go, ladies and gentlemen. All right, so a fly through as always. Let's draw it to a close there. I appreciate that I'm always flying through these, okay, because I want to share them as much as I possibly can in the 30 minutes. But I hope it's given you a little bit of help. I hope it's given you a little bit of insight for the weekend. It's going to be an interesting week, okay. So as always, keep your powder dry. Manage risk. Wait for your best shots, okay. And have yourself a fabulous trading week, and I'll look forward to speaking to you next Monday. Trade well, everybody, and I'll speak soon. Cheers.